If you know what your cost of business is, then I want to explain why gross profit is the only figure you should be looking at when you're actually trying to understand the financial position or your financial performance. So to understand what gross profit is, we need to look at the equation. Gross profit equals total sales minus the cost of goods sold. Now, there are no labor costs involved in gross profit. There are methods in which you can use labor costs in gross profit, but for simplicity, I like to exclude labor costs and count for labor costs in my cost of business. So in this example, in this particular garage, I've got a very basic profit and loss for 4 months. So we can see that the total sales is 62,446 in January. The total costs is £18,564. Therefore, the gross profit is £43,881. Your management system should be capable of giving you an accurate gross profit figure daily, weekly, monthly, quarterly, and yearly. Now, once you understand your cost of business, you will also know what it costs again, daily, weekly, monthly, quarterly, and yearly, to open the doors. From this point, you only need to deduct your cost of business from your gross profit to actually get the net profit of your business. Now, in most circumstances, most people won't know what their net profit is until 6 weeks down the line at very best. And at this point in time, it can actually be too late to make decisions. So I'm going to show you what happens when I enter the cost of business when I understand what my gross profit is. So in this particular business, it costs £35,678 per month to open the doors. And I can immediately see what my expected net profit is. Now, I prefer this method of reporting because I can fairly spread the costs of opening my doors throughout the year. Now, I always use the your Christmas party as an example. It's often a cost that gets lumped into December, but it is actually a cost that should be spread throughout the entire year. Now, once you know what your yearly cost of business is, you can, like I said, you can separate this down to whatever division you want to. And in this case, I've split it down to months. So this is the monthly cost of opening the garage. And because gross profit is an immediate figure from my management system, I know literally day to day what my net profit is. Now, I don't report on net profit day to day because in any garage, as you know, there's ups and downs throughout the month. So I will typically look at my GP on a weekly basis or on a monthly basis. But I know immediately on the last day of the month, I know precisely what my expected net profit will be. And from this figure, I can figure out what net profit margin I work to and what gross profit margin that I work to. So I hope that explains why, to me, when understanding financial performance, gross profit really should be the only figure that I need to take notice of. If you rely on revenue, you can be misled because if you are working to a low margin, regardless of revenue, you could be losing money. So if you have a record month in revenue, if your gross profit margin is low, then you're not actually making any money, and therefore that revenue figure can be extremely misleading and again lead to bad decisions. So I hope that clears up gross profit and how you can use gross profit if you understand what your business costs are.